Well, we're here with KJ, the insurance lady, and we're going to be getting all the insurance information we can today. So,
yeah,
awesome.
So tell us
I'm
about
excited to be here.
Your business.
So at Your Forever Agent, we work with individuals and groups to help them find, in Medicare, to help them find the best solution for what they need and how they use their insurance.
Cool.
awesome.
How'd you get into it?
That's a really long story,
what's the short
I think
version?
it was divine intervention. I had something that happened in my life while I was under a group insurance plan, and it really opened my eyes to the healthcare industry and some of the needs that were out there for people and how it was so misunderstood. People don't understand where they can save money on having different treatments and procedures done. And so the important thing is that people have choices, right? And today, people are more cognizant and aware that they need chiropractic care and they need other, I'd say, natural methods than going to a doctor and getting a prescription. So
They just don't know they have options, right?
right,
Or
they don't
most
know they
people
have
don't.
options. So that's where we come in and help educate them on those options,
What's the most fulfilling part of it?
helping people save money.
Yeah.
I love that. I
Yeah.
love it when I get a call from a client and they say, KJ, I just got a check back. What is that for? So I love that part of it.
Awesome.
Or I had a client that called me about a medication that was $300 that she had been prescribed. She's on a group plan. And I was able to help guide her to get that medication for $25.
Wow.
So that's huge to me because
Yeah.
now she doesn't have to go get a different medication. She's not paying a tremendous amount out of pocket, and it's something that she had already been prescribed by her doctor and needed and wanted, so she was now able to get it more affordably.
So if my insurance sucks or I have questions and I want to get a hold of you, how do I get in contact with you?
You can go to our website at YourForeverAgent.co, or you can call us at 469-899-3917.
Cool.
Yeah.
Awesome. Well, I hope people reach out to you because everybody likes saving money.
I think they do. I would agree.
So, we mentioned like health insurance options. People just don't know they have options. What are the health insurance options? Because most people think either private or right now ACA.
Right. So most people are used to traditional insurance. And when I say traditional, that means somebody who's paying a copay or a deductible in coinsurance. Because they don't realize that there's something else out there. There are lots of different options. So depending upon whether you're under a group plan right now or your spouse is under a plan and you can't afford that, or it's just become more expensive than you expected, or if you have a small group and you want to be able to provide them with options. There's individual health insurance options out there. There's short-term individual options out there, and you can structure them as a group, which is really nice. So there's lots of different plans that we can look at. Once I know what somebody needs and how they use your insurance, I can really help guide them on what options there are for them.
Is this something you run into with a lot of people not knowing how their chiropractic's covered?
Yeah, all the time, because in how we do chiropractic too, because we do kind of a specialty sort of almost service in chiropractic, it's not covered a lot. Like the codes that we charge, the time we spend, it just doesn't get covered even by traditional plans that quote unquote have a lot of chiropractic coverage. So, I give your name all the time. Some of the, I would say, things I get a lot though is, they're either on an employer insurance or their spouse's insurance, so they don't think that there's a different option.
They think that's the only
They
option.
think that's the only option, and I have to take advantage of that when maybe don't take advantage of that, try something else. But it really does depend on how, like what you need. And that's what you do is help them. Like if you do use prescriptions, or if you, let's say you never go to the doctor and you use more natural health care like chiropractic, you're going to be able to give them options that gets at least some of that covered rather than nothing.
Right.
So yeah, I run into it all the time, and it's just, I got to get people to understand like there are options, and it doesn't cost them to call you and just see what they are.
Exactly.
So that would be that's always my biggest push is just call you and see what there is.
Well, if chiropractors are running into it, then everybody's running into it.
Right.
They just don't know there's options.
Yeah.
That's usually the biggest thing we hear people they go, well, is it legal?
Yeah.
Because I think there couldn't be something other than being scammed, right? What do you mean, like, my insurance can help me or an agent would help me?
Yeah.
Like, an agent wanting to help me save money is the Like that doesn't
It doesn't
compute in their
compute,
brain.
right.
Yeah.
Mm-hmm.
Well, there is lots of options out there, and there's a lot of share plans out there that people are attracted towards because of the price point.
Mm-hmm.
We are a highly regulated field, so the Texas Department of Insurance regulates everything we do. So I promise you that all the plans that I sell, have been vetted and approved by the Texas Department of Insurance. Whereas if it's a share plan and it's not true insurance, you may not have, if they don't pay a claim, you may not have legal recourse.
So
to
a
go
share
after
plan
them.
would be like the Christian different groups that.
It may have a religious affiliation or
Okay.
it may have a non-religious affiliation, but
Okay.
they consider them share and not health insurance. So they're not regulated under the TDI.
Yeah, a lot of scary stories from that.
I have had a lot of scary stories. I've had some credit ruined. I've had some claims
Wow.
not paid.
Okay.
But a lot of people really like it and haven't had an issue with it. So again, it's about finding the right thing that fits you and your needs and how you like to use your insurance. And the other thing is, you know what? Some of us have our favorite pair of jeans, and we've just worn those favorite pair of jeans for the last couple of years, but something in our life has changed,
Yeah.
and those jeans don't fit quite as well as they used to. Maybe they're a little looser, you hope, or,
Yeah.
maybe they're a little tighter,
Yeah.
Insurance is the same way. Your needs in your life may have changed. You might have had a baby. Your kids might have left the house. There's different things that have happened. You might be approaching Medicare. You might want to retire. So there's all kinds of things that change in your life that would change how you use your insurance.
Gotcha.
And so that's why it's good to take a look at your insurance and how you're using it and if it needs to change.
So
That's a good way to think
you
about it.
mentioned different
Like your
types
jeans.
of
Yeah.
plans, but group plans.
Yeah,
When I hear you say group plans, I think I don't know what you're talking about.
yeah. So there's a term that's used pretty loosely out there, I think, and misunderstood, just like copays, coinsurance, and deductibles. But major medical is a term that's used, and what major medical means is it's either a group plan or it's an Obamacare or ACA plan. And what I mean by that is that it is then governed by the ACA laws that were created back in 2010 to help people cover pre-existing conditions, cover maternity, abortion, drug rehab, and mental health. If those things aren't important to you and you're in overall good health, then that opens up all kinds of options for you. In the group arena, there's all kinds of options for a group. In the state of Texas, you only have to have 2 people, we call them mom and pop shops, 2 employees or 2 partners in the business in order to qualify for a group. So that opens you up to major medical plans if they're needed. You could still go with an individual plan and structure it like a group, or you could go with like a level funded plan, which can help you save about 40% on the standard rates for a group plan. So there's lots of options out there. Again, it's just up to your agent to first of all be a broker who can offer all those options and be licensed and certified under those carriers and be able to offer those options to your clients and kind of know how to pick and choose the plans that are best for you.
So that's something a lot of self-employed people aren't aware of.
They
for an
aren't.
option that it only takes 2 to make a group.
It only takes 2.
So what's the level funded? What is
Level
that?
funded is a way for them to, it's just the structure of the plan. So it's a little bit different approach. It's still a major medical plan, so it's going to
Okay.
cover things like maternity. And then it's going to have a structure that covers for catastrophic and covers for the
Gotcha.
doctor visits and things like that. So it may be a little bit more limiting. Again, let me state that there is no perfect plan out there,
Right.
right?
Yeah.
The days of having $10 babies, where I come from, in a group plan, those plans don't exist anymore, okay? So there's no perfect plan. Everything's going to have its pluses and minuses, so you just have to pick the right one for you and have a broker that's willing to point out some of the pluses and minuses to you.
Yeah.
So what about those people that are saying, "Oh, well, I'm on my husband's insurance, I'm on my employer's insurance, I don't even pay for it, or it comes out of my paycheck, I don't even see it." How would you approach that conversation with that person that I run into in my office? And I'm like, well, maybe you should give KJ a call, because if you're using a lot of chiropractic care here with me, how would that conversation typically go with that client?
I think it's a matter of mathematics
Okay.
and looking at how do they use their plan right now? What are their needs? Are they using it for chiropractic and acupuncture? And are those services that they want to use? And then understanding that they can actually be on a different plan than their spouse.
Mm.
So a lot of people think, well, just because my spouse is on one plan, the family has to be on that plan
Mm-hmm.
and that they're getting a better benefit. Most people don't realize that when they say a family deductible, they still have an individual deductible that they have to meet. So they are, I mean, if you had a family of 5 or a family of 4 and you had a catastrophic
Yeah.
car accident or something like that, you are benefiting from that family deductible because it's going to cap out. But other than that, you're still each going to have to meet your individual deductible. And people just don't understand that. So again, it's all about an education process. So when you have somebody that is on their spouse's insurance and they're paying a tremendous amount, teachers fall into that bucket all the time.
Okay.
Can you go in a little more on like the deductible and copay co-insurance?
Yeah.
Because there is individual deductible, family deductible, but then there's copays, and then there's co-insurance, and it's different if you're in network or out of network.
Right. So a copay, which is typically going to be your $40, $50, $60 copay that you pay the doctor's office or the facility when you go and have a service done. That's your portion to help augment the cost of what that doctor is then negotiated with the carrier. Your co-insurance is a percentage, and that's the 80-20, 70-30, 60-40 percentage that you would pay towards a service that you're having done. So like an MRI, a CAT scan, maybe a urgent care, emergency room or something, where you have to pay the deductible first and then the
100%.
100%.
Mm-hmm.
So in a lot of plans, you have to pay everything out of pocket in your deductible or your co-insurance before you get any benefits whatsoever. What I like to do is educate people about that because they think things are covered and they're really not covered because they're having to pay whatever that deductible or co-insurance are. And people think because they have a $40 copay, oh, things are covered. No, there's a lot of plans out there that are going to either charge you the copay,
Yeah.
and then you're going to pay a co-insurance portion once your deductible and co. So when people get these bills, they're like, I thought this was all I had to pay. No. So it's important to understand and have somebody that explains to you how your plan works and what you're kind of going to be charged for things.
Well, what we run into is, because we're out of network with everybody with Medicare, is they don't understand the difference between copay and co-insurance. And so out of network, we're charging a co-insurance, which is set by their insurance provider. And it's, sometimes 20%, sometimes it's 50%. And so if we're going to bill, we're going to have to collect whatever that percentage is after your deductible's met.
Right.
And so if they have a $500 deductible or something, they're like, oh, that's fine. But it's so rare to find somebody with an out-of-network deductible that low.
Yeah.
It's usually like $2,000 up to like $10,000, $15,000 even.
Yeah.
And
the average deductible today is between $75,000 and $10,000.
Yeah.
Because people
crazy.
Choose high deductible plans so that they can have an HSA. A lower premium and an HSA, because that's what employers can afford, is the higher deductible plans. So unless you're with a really big corporation that's paying a portion of the employee's portion. I mean, back in the day, the company used to pay my family's premiums. And that little by little went away. And most companies today only pay, they're required to pay 50% of the employee's portion on a major medical plan. That's what the carrier is requiring.
But they're not required on what plan they pick.
Exactly.
That's why they're higher deductible plans now rather than these.
Well, because people are only looking at their monthly premium. And so they're thinking, oh, well, I'm going to go with a lower premium. When I have some 25-year-olds that are getting the lower premium and their employer's paying a portion of it, so they only think, well, I'm only paying $100 or $50 a paycheck. But then they're having to pay everything out of pocket, even for a doctor's visit.
They have a massive deductible.
Right.
Yeah.
And they're never going to meet that.
Or
hope they never meet that, because that would be a catastrophic event.
Yeah, well, I mean, we'll have people that, I swear they don't do anything but this, and that's great. But it'll be like, oh, well, you have a $2,000 deductible, so if we bill insurance, it's about $100 a visit, and you have 20 visits. So you're going to spend $2,000 to basically use your deductible up, but by that point your 20 visits are up.
Exactly.
And they're like, well, that doesn't make sense because I've been paying out of pocket up to that point. I'm like, no, those count as benefit visits. You just have to pay all of it.
Right.
And so even though you just hit your deductible, that was also 20 visits it took to do that. Now your 20 visits won't be covered.
Well, here's the catch, Chris. Some of those plans don't count doctor visits towards the deductible.
Oh,
So some people may be going to the doctor thinking that's going
gonna
towards
apply.
their deductible, and it doesn't. There are some plans that do. So
Yeah.
again, each plan has to be evaluated on its own.
Probably depends how the doctor bills it too, right? If it's,
No, it's really the insurance plan. So
Okay.
some doctor visits don't count towards the deductible at all. Prescription drugs don't count towards the deductible. Only lab, blood work, or procedures are going to count towards the deductible.
Wow.
Yeah,
I did not know that.
it depends on the plan.
Yeah.
Yeah,
Goes
That's
along with the
interesting.
myth of the out-of-pocket maximum, huh?
it does.
Yeah.
So you mentioned prescriptions.
Yep.
This is a huge area, especially older people, where they get caught up and something used to cost $10, now it costs $300, or this, pharmacy wants to charge me X dollars. Like, how does that work in prescriptions? Because I assume a pharmacist is almost like a provider at that point, right?
Kind of.
Okay.
Yeah.
It's not standard pharmacy to pharmacy, though, right?
No. It's amazing the difference between prescription drug prices and the pharmacies that you go to. And it depends on Medicare and their Part D coverage. So this is a whole big topic.
Yeah.
And so it's almost its own little conversation that you could have with some. I could spend hours talking about prescription drugs.
What do you do with your people that aren't Medicare age?
So Medicare or non-Medicare, group or non-group, I really help to educate people about where they can go and what they can do. Most people know about GoodRx.com. I should get commission from GoodRx.com, but I don't.
GoodRx.com. Okay.
There's also lowestmed.com. And then there's some other Blink.com is a new one that's come out.
Like
Blink.
Okay.
So there's all different places that people can go. They can get apps on their phone and look up their prescription drugs just to see how much they cost. The variation can be huge, and it can change. Armour Thyroid is something that people take a lot of. And the price used to be very low. It was probably close to $9 a month. But think about it. If you're on a group plan and your co-insurance is $20, you're going to pay $20 for that drug when you could have paid maybe $4 to $9. And depending upon where you go and have that filled, there could be variation with that too. So it's always good, again, to be educated and aware of what your options are. And so you can use these tools in order to look at your medications and find the best plan. GoodRx is really good because it'll show you if there's manufacturer's coupons that you may qualify for. Unfortunately, when you're on Medicare and Part D, you can't use GoodRx and your Part D prescription drug coverage. So you kind of have to choose one or the other.
Gotcha.
But when you're on a group plan and you have a copay or co-insurance for that medication, you can use GoodRx and just pay cash for it. It may be cheaper for you to actually pay cash for that medication versus it going through your insurance, especially since it's not going towards your deductible. Why not pay less?
It doesn't matter.
Yeah,
exactly.
why not
People
pay
don't know
less?
that, though.
But they don't know that.
They
They
don't
just
know
think
that.
it's all tallying up
Yeah.
in my account, and it's not.
Yeah.
Yeah.
And I'll have people come to me and say that too. Like their deductible is so high that they would never meet it with chiropractic care. I mean, our self-pay rate is $65 a visit. If I bill that same visit to insurance, I have to itemize it. It's $100.
Right.
So if you haven't met your deductible, you're paying, $35 more per visit than you need to.
Right.
But it's just, people think, oh, just bill my insurance anyway because I want it to go towards my deductible. But what they don't realize is if I bill $100 to the insurance, they may only allow $75 of it.
Right.
And that might not even go towards deductible. So,
Yeah.
like you said, there's so many different variations. Having somebody like yourself that knows that is good to have your card in their back pocket.
That's usually when people get mad and feel like they're getting screwed. We go, well, here, we have somebody you can talk to.
Well, and my husband comes to you, I come to you, and my daughter has been to you. And we have filed with our insurance company that we have. And for our $55 visit, we got back $120 for those visits. So now that allows us to spread out and come to you more often and use that.
Use that
So
benefit.
whatever, and that's a cash rate, right? So I'm now in control of that cost. I could have you file it, but then you'd get the $120 and then I'd have to negotiate with you later. So,
And that's where some people would tell them, we can submit it for you and you get the check in the mail.
right.
but you have to pay what's totally due today. And they're like, well, I don't know if I want to take that risk. It's like, well, welcome to our side.
Right.
Yeah.
Yeah.
That's the risk we're taking is now we know, because they know like, oh, it's possible they'll send me less back than I'm supposed to get.
Right.
And then I have to call and fight them on that.
Yeah.
Yeah, that's why there's billing departments and all this stuff in hospitals, doctors' offices, all that stuff. And that's why it's $100 if we have to bill your insurance,
Right.
because that's that much more time for us to do notation and submission and the cost of being able to file electronically.
And
all that
having
stuff.
somebody there to manage all of that.
Yeah, and then somebody
Yeah.
when it comes in to track it and apply it and appeal anything, like that all takes time. So people are like, well, why does it cost more?
Mm-hmm.
It's like, well, because there's a lot of red tape involved versus if you just pay out of pocket.
Right.
But that's what's good about your plan is they can pay the office visit, get a receipt, send that in, and get the insurance benefit.
And they'll get their benefit amount right. Yeah.
That's cool.
That's one of the plans that I have.
That's the big attraction for a lot of people.
Absolutely.
Because otherwise, and that's not involved with your deductible being met first. That's just
No.
literally
On the
send
plan
them
that
a
you're
receipt.
talking about, it's called an indemnity plan. So an
Okay.
indemnity just is a fancy term that means a specified benefit for specified services. So what those plans do is they provide you with a specific benefit for specific services. The nice part about it is it's a PPO. So you can go anywhere, in network or out of network. So even if you're not in the PHCS network, they can still come and see you, pay cash, submit the claim, and get reimbursed.
That's awesome.
So that's the nice part is there's specific benefits for specific
Because
services.
then you can tell them like, hey, I want to pay cash. What kind of deal can we work
Right.
today?
Self-pay is becoming a common terminology in doctors' offices because I think, again, there is more education out there. There is more awareness
Yeah.
that that's an option for people. And they're amazed at the difference in pricing. I worked with somebody the other day on going and having a surgery for their child, a tonsillectomy and something else. And the facility was in network, but it was $15,000 if they filed it through the insurance or $5,000 if they paid cash.
Mm-hmm.
Well, by the time they get their benefit and the surgical benefits and all the different benefits that they have, they'll pay less than what a normal copay would be.
Huh.
So
Yeah.
it was a huge eye-opener for them to see the difference and hear that. And they had an agent who was on the phone with them to ask the right questions so they didn't have to memorize everything.
Yeah.
So I hold people's hands quite often, probably more than I should, but I do love
That's
working
why
with
we
my
love
clients.
Can you talk a little bit about the reason insurances are so different today? Because I think as a consumer we don't realize that the reason there's less coverage, more pays is how the whole thing works. This goes all into a bucket. Insurance companies still need to be profitable because they're a business. So the more we actually use our insurance, the more this is going to become a problem.
Right.
Can you talk a little bit about like just the
Insurance
general
history.
Yeah.
So I don't have all the stats here, but
Sure.
Insurance and health insurance in particular was originally intended to be for hospital coverage. And it's changed along the years when you had workers who needed more coverage. And so that's kind of how that all, I won't give you all the gory details because
Right.
I can't remember them all, but
Yeah.
that's really kind of how it started. And today people think that insurance should cover 100% of everything. So every
Yeah.
Band-Aid, every doctor's appointment, every MRI, everything, those are the high users.
Yeah.
And that's really not how insurance was designed.
Mm-hmm.
In fact, when the ACA came out, one of the biggest things that it was intended for, and there's a great purpose for having ACA. So let me just say, there are people out there that need to be on an Obamacare ACA plan
Mm-hmm.
because they're sick and we don't want to, look at them for pre-existing conditions. We want those things to be covered and they need it.
Mm-hmm.
There are other people out there that are healthy and that are living healthy lifestyles and in overall good health. They may take a couple medications, but they're in overall good health. Those people have more choices in their insurance because insurance companies are wanting more and more of those. So I think with the changes in people leaving corporate insurance plans and group plans and becoming self-employed, the insurance companies have recognized that that's a great pocket of people that they want to do business with. And so
Yeah.
when you have a lot of sick people in the ACA, that's why the prices are so high, because that pool of people is mainly sick. and the claims are really, really high.
Yeah.
The other difference is that when you're with a major carrier like a Blue Cross Blue Shield, United, Cigna, Aetna, I'm not picking on anybody, but they have negotiated rates with their providers and their network, and they're not paying their provider as much as they're charging. And so the provider's only getting a portion of that. So they're charging a higher rate, which is what I call the retail rate. Okay? So you've got people out there that are paying the retail rate, and then there's other plans out there that are more on the wholesale level. So when you hear things about people having heart attacks and they're hundreds of thousands of dollars, those are in the retail arena.
Gotcha.
Versus you could actually have a heart attack. It's still expensive because of the facilities you're working with, but you'd be more in the wholesale arena. But when you have that larger pool of sick people that are using their insurance more frequently and getting sick, then that's why the rates go up. When you have a healthy pool of people, then your rates go down. It's the same as it is for life insurance. So if they have a bunch of people that die all at once, claims go up, right? And prices and premiums go up. So I'm sure there's an economist out there that could explain it a lot better than I'm doing. But
no, but I mean, I just wanted to get a little bit of education out there too, because, there is that mindset that insurance should cover everything. I pay X amount per month. I should get this covered.
Right.
When that wasn't intended how it was, that wasn't the intention of health insurance in the first place.
Right.
It was just to displace the catastrophic cost. But the whole thing has just led us to be less healthy as a society because we can just get it covered rather than taking care of ourselves.
Right.
So things like what I do, chiropractic, alternative sort of, acupuncture, massage, you name it, isn't covered because it's a wellness lifestyle.
Right.
So, but now, with things that you provide, you can get some of that covered. You're not going to get 100% of it all the time.
Right.
But at least you can get some discount or some back and plan your budget a little bit better.
Yeah.
So
nobody expects their dental insurance to buy their toothbrushes and toothpaste,
Or their car insurance to cover their
the gas
oil
their oil changes and their tire rotations.
Yeah, it's just health insurance, and
that's a good point, Chris.
And they deal with big numbers.
Yeah.
Health insurance companies are dealing with. I mean, every day there's probably a preemie baby or somebody with cancer, and we don't put it into context that they're having to deal with those families and those situations and pay out on those where that family hasn't really paid in anything.
Right.
And so it's a whole balancing game.
It is.
And so when you see they're profiting, hundreds of millions of dollars, but they're also
paying
dealing
out
on a level where their economy is at hundreds of millions,
right.
Paying out and receiving, they're big numbers.
Yeah.
So that's with all economics, really. We get mad that Tiger Woods can have 7 cars worth $100,000 each, but that portion of his income that goes towards those cars is a smaller piece than what you and I are paying out of our income towards our $30,000 car, right?
For our Vita
It's
Jetta.
It's you have people who make $70,000 a year with $50,000 worth of car on the driveway, and it's you understand the percentage of your income that's involved in a declining investment.
Right.
Mm-hmm. Tiger Woods has 2% of his income in those cars.
Yeah.
I'm sorry he makes a lot of money. I'm sorry he's popular and was able to brand himself and be worth that, but it's percentages. So their millions of dollars in bonuses is probably, sure it's a lot, but percentage-wise, that they're just dealing in those numbers, so it sounds a lot to you, right? And then, CEO bonuses and stuff, you meet some of those guys, and you would not want to live the life they live to receive the money they get. I don't think they think it's worth it most of the time.
Right.
They're so tired and sick, and they don't have, real good family connections usually. They're traveling a lot, it's not something we should be bashing them for. It's something we should probably take a step back and look at our own economy and deal with it at that point.
Well,
first.
And if we take care of our own house, using chiropractic care for our children, for their earaches, and taking care of ourselves to help minimize the stress that helps with headaches and migraines. And there's other things. You and I have had some rich dialogue about autism. We've had dialogues about medications that people take and how they could be taking less medications if they were kind of taking care of their house, right? Mm-hmm. You don't let your roof go and, the paint chip and, your foundation get cracked, and expect to be living in a safe home.
Mhm.
You take care of those things. Well, your body is your foundation, and you've got to use means, and hopefully healthy means, to be
Mhm.
doing that. Just,
personal responsibility.
It is.
Yeah.
And I think people, one thing that's probably, I won't get a lot of, I may give bad press on this, but, a lot of people listen to everything that their doctor has to say. And
It's a trust.
And I agree. And I'm not a physician. I'm not a doctor. But I think you have to look at yourself and say, is this really right for me?
Mhm.
And what are the side effects of the things that the doctor's prescribing? And do I really want to take that risk?
Mhm.
That was my journey.
Yeah.
In being able to, ask more questions and challenge why they were recommending something for me that really wasn't a good fit for me.
Yeah. And not to be afraid to say, what's this cost?
Exactly.
We get something in here that they don't have to deal with in the medical office, of people being okay in a chiropractic office to say, well, what's it cost?
Yeah.
And we'll oftentimes be like, when they go to an orthopedic doctor or the neuro doctor, wherever they did before this for their injections that didn't work or surgery didn't work, I don't think they ever ask the doctor, well, what's this going to cost?
Right.
Because the people that we will talk to about that are like, well, you realize your injection was about $1,800 each. And you went through 3 of them. And they go, we have insurance covered. It's like, okay, but what bill did you get at home? Oh, okay, well, I guess it was kind of high. All right, so 3 months of care for $900 or something like that. We're talking smaller numbers here.
Yeah.
Now, we can work with you on all this, but, we have those conversations, and I think, man, they don't do that when they go to a medical doctor. I don't think they know
That's
to ask
a good point.
anything.
Right.
They just go, they get a bill. Like, you schedule
Yeah.
your surgery, and you just go, well, this is going to suck.
Yeah.
What's this going to look like when it shows up in the mailbox?
Right.
I hope I have good coverage.
Yeah.
It's just blind trust.
Yeah.
But we get held to a little different standard. People will cancel their appointment if they can't afford it.
Right.
They'll not take care of themselves.
Yeah.
But they can do that with their medical. They can say, no, never mind. I'll go somewhere else.
But what are the long-term ramifications of not taking care of your health?
Yeah.
Just because you don't go to the doctor doesn't mean you don't have something.
Right. Oh, yeah. That would be any husband on the planet.
I thank you. You point that out.
I'm one of them.
I'm like, just because you don't go
Any
doesn't
man,
mean
a
you don't
husband.
have something.
Yeah. Anybody with a penis has that problem. So, to branch off from there, let's talk about Medicare a little bit, because it's like a whole topic on its own.
It is. That's probably an hour-long discussion. But there's different plans out there for Medicare. There are Advantage plans, which are more of a package plan, and then multiple carriers. And then there's supplemental Medicare, which is more of it's called GAP or supplemental, and that's where it's a PPO.
Yeah.
And you can take that anywhere. And chiropractic is covered in a lot of the Medicare plans.
Cool.
So it's important for our elderly, since we're living longer and longer. And Medicare starts at 65. So it's important for them to still take care of their bodies, because they may be around for another 50 some years.
Yeah.
And wouldn't it be great? It's rare for me to get somebody on Medicare who doesn't take any medications or few medications. But a lot of those people do use chiropractic services.
Yeah.
So it's really interesting when I see people with a laundry list of medications that they take, and I ask them about chiropractic or alternative options, and they're really not aware of it or haven't ever used it, whereas people who don't take a whole lot of medication typically are. They're using acupuncture or chiropractic in their
for us,
practice.
With Medicare is we'll run into the issue that Medicare will cover chiropractic. It only covers the adjustment of chiropractic.
Right.
So any PT that we do or anything else is not it's gonna get billed, but it's not gonna get covered. So you'll have to cover that cost. And I go, oh, well, I go to this place down the street. They only charge me $8, and they do laser and all this stuff. I'm like, well, they're giving you stuff for free, and they're not supposed to. That's $10,000 fine and occurrence. So they're pretty brave to do that.
Right.
We can talk financial hardship and all that kind of stuff, but that's where we go. They go, well, I have supplemental. Won't that cover it? And they don't understand the difference between supplemental Medicare and secondary coverage.
Okay. So Part A and B. Part A is your hospital coverage, so if you have to go in the hospital. Part B is your doctor coverage. Medicare, the basic Medicare, is going to cover about 80% of your coverage. And then after that, that's when you would want an Advantage plan or a supplemental plan. That's going to cover the other 20%.
What Medicare doesn't cover.
What Medicare doesn't cover.
Of what they allow.
Original Medicare, A and B.
Of what they allow. So in our case, in our office, there's only 3 codes that Medicare covers, which is if I adjust anything on your spine, they will cover that.
Okay.
But if we do PT, if we adjust an extremity, if we do any muscle work, any therapies, none of that is covered. So it doesn't cover those codes at all.
Okay.
The supplemental, correct?
No, that's correct. Yeah, they only will cover
They'll cover the other
what was allowed.
The other 20% of the 3 codes that they even allow.
Right. And that's usual and customary in most of
that's
the
what
insurances today. Is
they might
usual
cover
and
80%.
Yeah. Well, no, it covers
up to 80%. Right?
Yeah.
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 That's
I mean, there's some
exclusion.
There's some exclusions. It's not going to cover everything
Right.
all the time, but there are the majority of the coverage that people over 65 require. It's going to cover if you have a supplemental or an Advantage plan, along with your A and B, which you can't get supplemental or Advantage without having A and B. But it will cover the majority of it. Now, that doesn't mean they shouldn't use it, right? That's about talking to you and then maybe paying cash for that. It still has a long-term benefit for them to use chiropractic, even if they had to pay $100.
Well, and we'll tell them we're participating, so we're in network with Medicare. So we know what Medicare knows what we're going to bill them. And so you're more than likely what the 20% you pay is going to be all you owe. But if we're non-participating and we bill Medicare, I can bill Medicare $500 for your adjustment. They're not going to pay me 80% of $500. They're going to pay me 80% of what they find.
Whatever
the customary amount, right?
Whatever your negotiated rate is.
Yeah, so you'll pay me 20% of $500 if
it was that high.
If it was that high, but if they only give me $30 back or whatever, $20 back, I now have only collected $120 of $500. I am going to bill you the other $380, right, or whatever is left. And that's the risk of going out of network, is they can collect on the difference, right?
Well,
but that's where a supplemental plan can come in and say, well, we'll cover of that other $380, we'll cover up to this and try to settle with the provider or whatever to get closer to $500.
There's again different carriers out there that are gonna. A plan G is a plan G is a plan G, right?
Okay.
So all the plans are the same through the carrier. It's required. Again, highly regulated area.
Yeah.
And so when you're talking with your agent, your broker, about the plan and how you like to use your insurance, it's important to tell them that chiropractic is something important to you, so that your broker can look at the carrier and see if that's a provision in their coverage, or if that's an exclusion. So there's some that offer gym memberships and discounts towards those kind of things. Some of the Advantage plans include dental, vision, and hearing. So there's different plans.
Is that like what the silver sneakers stuff is and things?
Silver sneakers, yep.
Okay.
I can't mention their name, but
okay.
Yeah.
Right. That's one people that see at 24-hour fitnesses and things like that, right?
Yeah.
So long story short is they just need to talk it out. They need to hash these things out with somebody. Like
whether you're 18 or you're on Medicare. There's options.
Zero to
really
0 to 80 or 90 or
0 to death, whatever. Yeah.
Cool. And this is why we refer everyone we can to you, because even at the very least, I tell them that somebody asks questions to you. That like if you call your provider, you're going to get on the phone and be on wait and not get an answer, and it's going to be a headache. Where at least you're going to be personal and you're calling a company and this is the owner of the company.
I try to be.
She knows the owner of the insurance company she works with. And she's a broker, so she's not going to sell you just Blue Cross or just this. She's going to evaluate which of all the plans is the best fit for you and your family and something you actually use. So if you're going to pay for insurance anyways, why not get one that you can use? And that's where, when you said it to me, I'm like, it's on. Now she has appointments coming up that I'm like, oh, we're going to get a check back for this. I'm excited for that day.
Yeah.
I mean,
that'll be good. You should go more often.
I pay for my own chiropractic care too. I mean, that's kind of a misconception in my field too. It's like, well, because you're a chiropractor, you get it for free. I'm like, well, first of all, I paid over $200,000 to be able, but I still go and pay somebody to get care too. So it'll be nice to get some of that back.
Yeah. Well, you have any closing statements?
No, I just, I love what you guys do. I love your office and how personable you guys are and how you also educate your clients and do a lot more than chiropractic. I think you're so much different
Yeah.
than the traditional
Bunch of
chiropractor.
weirdos.
Thank you.
Well, and I've been seeing a chiropractor of sorts for 30 years. And typically it's a process that they go through. And again, that works for some people.
Mm-hmm.
It wasn't working for me. So I looked at alternative options. And so, I come to see you, I get massages, I do other things because I'm in a pretty stressful job and I'm in front of my computer an awful lot, which causes some other things along with quilting at night. But,
Yeah. Yes. Hobbies.
it's a
get in
side
the way.
occupation.
Yeah.
But, chiropractic has just been an important part, and what you've done for me and my family is just, it's invaluable.
Thank you.
And so
Appreciate that.
even if I had to pay 100% of it out of pocket, to me it would be worth it.
It's worth
Thank
it.
you.
Worth
Yeah.
it.